So I wanted to make a video on Bitcoin for quite a while now, but like I just been getting lazy and yeah, but like now's about time. I guess I should make it because it's been kind of getting crazy. And today morning, what happened was this company called Long Island Tea Corp. So this thing right here, as you can tell by the name Iced Tea, what happened was they're gonna shift now uh, I, from iced tea to blockchain technology. That's going to be their shift as a whole company, and they changed their name from Long Island Iced Tea and they're going to rebrand as Long Blockchain Corp. And this thing like finished the day at like 183%, crazy, just for changing the name. And another crazy example of this is Longfin Corp. Um, so these guys had nothing to do with blockchain. They do a IPO for 2 days. After 2 days, they buy a blockchain company, and the stock skyrockets like I think at the peak it was like 2,500 something. Hold on a second, 2,500 something. Like it's crazy. And at the peak here, the company was worth like 10 billion, and the company does revenue in like double-digit millions, and like putting a 10 billion market cap on that is crazy, but that's exactly what happened. And so yeah, it's been getting kind of crazy, and things like these you usually see on the latter half of the business cycle, where things kind of start getting crazy if there's like a big misallocation of resources that's happening. And there is definitely a misallocation of resources that's taking place as we speak. uh, so just to get started with, the central bank sets a benchmark rate, and the American benchmark rate is at 1.5%, and the European benchmark rate is at 0%. Now, if you just look at those different numbers, you must say, "Oh, the Europe must be in a near recession. Like it must things must be really really bad." And if you look at other numbers, for example, if you look at Germany's inflation, we're looking at like 1.8%, right? For United States, it's at 2.2%. So that's not a big difference. And if you look at the GDP numbers, US has 4.2, sorry. Germany has around 4.3. So inflation and GDP numbers are very similar, and yet there's like a such big difference in uh, the benchmark interest rates set by the central bank, the ECB, and the Fed. And this causes a lot of what happens is that money is mispriced, capital is mispriced, and money starts going places it shouldn't go to to find returns. And that's kind of what's happening with Bitcoin. Um, a lot of money flowing around, and it shouldn't be flowing around, and it just causes bubbles. But another thing that really is pushing this is like this dude right here, commander in chief. Um, so this guy, he really tries to emulate one president in history, and that is Ronald Reagan. And Ronald Reagan, when he came in the early 80s, he was known for bringing America out of the stagflation. Stagflation is basically inflation plus stagnation in the economy. They call it stagflation. There was high inflation and the economy wasn't doing well. High inflation, and yeah, and he was responsible for bringing people out of that. Now, um, Jimmy Carter was the president before him for one term, and he did put in the new Fed chairman, Paul Volcker, that um, raised interest rates in double digits. That actually brought the inflation under control. But this guy did something really sneaky with with the Iran hostage situation. It's kind of a, I mean, I suggest you guys, I really recommend you guys go look at that part of history, how that kind of worked out. I mean, you think Trump is sleazy, like what this guy did, running backdoor channels and running deals, and his vice president was like the former head of the CIA, and like how that all ties in. It's quite amazing piece of history. But anyways, going back to this, so Trump has a really big thing for this dude right here. Like he wants to do everything like him. You know, he wants to be known like him. Like this is his role model. And just to show you how much he likes him, Reagan was the first president to use the Let's Make America Great Again" slogan. And look at this, Reagan. You know, it's so this is how much he loves the guy. I mean, Trump, you know, did the whole "Make America Great" thing, and when he ran during 2016, if you've been living under a rock, but so he really tries to emulate that. And the recent tax cuts that were passed, uh, you know, pushed by this dude, it's like a really big. It's like corporate welfare for the rich. Like just cut the tax for the rich people, and they'll you know magically start hiring people. I mean, this guy doesn't understand the nuances of you know automation and like new technologies and so on and so forth. Like uh, the the growth number like this dude factored in into the budget plan, um, into the tax cuts to achieve the kind of sustainability in the debt. I mean, the number they punched in um, for the GDP growth, it's kind of ridiculous. Anyone who like has looked at it has like a sane head, doesn't swing naturally left or right. Just as a rational person, when they look at this, they know this isn't gonna work. This is like one of those situations what like 10 years from down the road when they look back and they're gonna be like, man, we really had a chance to control the debt, but this guy blew it. This guy freaking blew it. So that's what he's doing. So another thing about Ronald Reagan was that when he came into the White House, the national GDP, debt to GDP ratio was below 40%, and Reagan really ran big deficits, and that's what Trump is trying to do: run big deficits to boost the economy. But the thing is, when Trump came into office, the debt's already at more than 100%. So you're pushing the boundaries here. So that's like the misallocation of resources that's happening. You have central banks, and then you got this dude that's you know really pushing the envelope. So you got monetary and you got fiscal policies, both favoring misallocation of resources. Just to give you guys an example, if you look at the Shiller PE ratio, Shiller is the economist, and he came up with this inflation-adjusted earning ratio, PE, price to earnings ratio. Right now, we're sitting at the second highest level in history. Uh, that's kind of crazy. And the two peaks, the first peak and the third peak, we're at the second highest peak right now. So the first peak and the third peak, first peak was first highest level is the late 90s with the dot-com bubble. We all know how that ended. Third highest level was 1929, the Black Tuesday. I mean, none of us were alive back then, but uh, we know how that ended, right? 1929, followed by the Great Depression. So it's really pushing the envelope here, and so that's what's happening. But if you look at Bitcoin though, when it reached near that 20,000 level, the market cap's around 336 billion. And for this to become a proper bubble, I mean, if this thing pops, I mean, if this right here was the top in Bitcoin's history, this was like the absolute top. Oh man, I'm gonna be sad. I'm gonna be really really sad, because like for it to reach a proper bubble, this thing should at least run into trillions. This thing peaked at like 336 billion. That's, I mean, come on, bro. At least give me a bubble with like a trillion in it. You know, like that's like the proper. That's like the proper bubble territory. And 336 billion is not that much. And I think this thing's gonna do a pullback and then keep on going. And so let's analyze this. It could come back to 13,000, 12,000 level, uh, depending on how it finishes this week. Um, but I think it's gonna go lower. We're looking at, I think the magic area is around right here, 8,500, 9,500. I think that's a magic zone. So if anyone's like planning on making a really good trade, I said trade, not invest. You can't. This is not. If you're like planning on buying this thing and like holding it for like 20 years and retiring with it, like, oh man, you kind of, to be honest, you kind of deserve to get hurt. But if you're like this is like an excellent trading opportunity though. I mean, if you got the platform, I mean, what I trade on, and this is not even. I can't even get the charts on the platform that I trade on, so this is not really worth my time. But the magic zone is 8,500 and 9,500. This area right here. If it pulls back to that, and you're sitting on the sideline, and you want to put in, let's say, $10. I mean, not $10, $100. That's the magic zone you want to do it in. 8,500, 9,500. That's where somewhere between that $1,000 range is where you should put it in. Funny thing, while this whole thing is happening, the most hated commodity, I mean, not hated, but like ignored and so on and so forth, like, which is gold, and everyone says like Bitcoin's the new gold. The funny thing is, while this whole Bitcoin thing is happening, gold is making like a classic bottom. I mean, if it doesn't go below this level right here, we're looking at the low of 1124. If it doesn't come down and breach this level, guys, and it pushes for like and it can like successfully breach this level and close above that, we're looking at a bottom. Okay, gold has made a bottom. And funny thing is, like if you study like where bottoms happen in the market and where tops occur, I remember back in 2011 when everyone I knew was like paying attention to the news and it's almost about to hit 2000. Everyone's like, man, I gotta get some gold, I gotta get some gold, and like everyone wants to get in, and that's where exact peak was, right around this area, and then it just goes down for like the next 6-7 years, and now no one's paying attention to this, and it's actually putting in like a really nice bottom pattern, like it's putting in a bottom, which could be potentially a bottom, and no one's paying attention to it. This is exactly where a bottom should occur, just from speaking from a psychological standpoint. But anyways, so yeah, those are my 2 cents for this, and good luck.